If you like analysis in chains, and if you like crypto, and if you like blockchain, join us on Telegram. Search for Analysis in Chains on Telegram and join Neil, Nathan, and all your favorites. Now, on with our show.
This is the Analysis in Chains with Nathan Williams and Neil Kieran.
Welcome to Analysis in Chains. Neil, have you survived the crypto winter? I'm looking at $3,500 today.
$3,500, yeah, $3,500. That's probably a good price because I think there's a lot of negative sentiment out there. People now worried it's just going to keep dropping down to maybe 1,500 before the whole rally started in early 2017. So I would be happy with 3,500, but we'll see. I'm not very hopeful at the moment. I think a few weeks ago,
so we all try to catch the falling knife.
Yeah, I think it was like a month ago. I was pumped and I was so enthusiastic, and I can only see things go upwards. But ever since it fell recently, it's just doom and gloom, and I really cannot see it improving for another few more months.
There's absolutely no proof that I ever predicted a bull market. None at all. We called it since the beginning.
Well, I think the biggest thing that's happened recently, and I'm sure many people have been reading about it and heard about it, is a lot of these miners have been either switching off old miners or old mining equipment, or various miners have just gone out of business and have given up because there was a big miner boom at the start of the year. Even though the price was going down, people still thought, look, this is the future, keep mining, no matter what, it'll be worth $100,000 in 2 years' time. But the laws of economics and profitability eventually caught up with a lot of these miners, and that's why a lot of them have started to capitulate. But just because they're capitulating does not mean it will end with them, and it means the price will start to go up. My big fear now is that we will start to see the same for exchanges. Many of these exchanges made a lot of money at the start, but now with low volume and I would say more increased competition between exchanges, it's going to be much harder for them to make a profit. And that's more dangerous because for all of those who still have crypto on exchanges, their crypto could actually disappear. Because if they don't take it out of exchanges when they go bankrupt, well, then you're going to be losing money. So this is this could be a new fear factor that could creep in the next few months.
This is a thing that people may not have been around to experience if they're new to the crypto scene, for example. A lot of people were caught by the first crypto exchange having less than transparent practices. That would be the Mt. Gox or Mt. Gox online exchange. And when it went under, people lost their crypto. And there was a huge legal battles over years trying to sort that all out. We could see a repeat of that because even though there are a lot of people have become a lot more wary of exchanges, there were a lot of new people that got into crypto in the past 2 years.
Exactly. And the thing about crypto is that it's not very intuitive. Going onto an exchange and just buying crypto with your credit card is the easiest part. But you're supposed to move it onto your own wallet for your own security and for your own protection. And while some exchanges I would be more confident about than most, for example, Coinbase, there's a lot of dodgy ones out there. And, people maybe have opened these ones up for various reasons, maybe because they weren't too happy with KYC policies coming into some exchanges, and they decide to stick to the ones that are out of what they feel out of the reach of the governments. But it can all come back to catch up on people. And I think one of the first steps we've seen in that possibly happening is Coinbase's recent announcement that they're now looking at 30 other crypto coins that they could add to their exchange. And why that is significant is that for them to grow, one of the best ways of doing it is by adding new pairings to their exchange. And if they start doing that, they could start taking volume away from other exchanges out there. And that's why we're going to see some consolidation. Now, consolidation, I believe, is a good thing, because it means that you're getting rid of the weak, and then that means what you'll be left with are the more stronger, trustworthy, more secure exchanges, which is just better for the ecosystem. You know, think of all of these hacks we've been hearing about over the last year, which really impacted people's confidence in crypto. But what we need is more durable, secure exchanges going forward. So, but this could mean more pain in the next few months.
One of the things to keep in mind is just what an exchange is. And this can be an important point of learning. You touched on it briefly, Neil, but I think it's worth expanding on, especially for people who maybe, got into crypto in the past year or have only executed Coinbase exchange trades or that sort of thing. Essentially, all an exchange is when if I'm operating an exchange, I have a wallet that has some Bitcoin in it. I have a wallet that has some Ether in it. And you transfer Bitcoin to my wallet, and I just keep track of how much you transferred. And so then I technically own it. I technically hold it. Legally, you may still own it, but if I have the keys, I have full control of it. And then you say, hey, Nathan, give me some Ether in exchange. And so I say, okay. And I keep track internally that you now, instead of owning the Bitcoin, you own the Ether at whatever price. And then at some point you can withdraw it to your wallet. As soon as you withdraw it to your wallet, it's locked with your private key and not mine. And so that's when it's safe. It's in your wallet. You can control it. You can transact with it. But as long as it's in the exchange, in my exchange wallet, I have the private key. I can control it. And so if I go out of business, your crypto is gone. It's with whoever. And so there's a certain level of trusted third party that comes in whenever you have an exchange. Now, there have been people that have tried to build a decentralized exchange, and it's not easy. I haven't seen any that really solve the problem yet. Maybe there are, but there are a couple of key problems with a decentralized exchange. It basically means matching individuals who have one cryptocurrency with ones who have another one, and they both want to change at the same time. And it's actually a really hard thing to solve because you have to have a decentralized order book. And I mean, it makes sense from a theoretical point of view, but it's actually very difficult in practice to remove that trusted third party. And so you do have to be careful with it, because crypto is essentially digital version of cash. It's something that there's no going back on a trade once it's gone. And so you do need that trust there when you're dealing with an exchange.
Yeah, the two most common decentralized exchanges out there, well, that I know of, is 0x and AirSwap. But they're not hitting the highs in terms of volumes that we would see for the likes of Coinbase or a lot of the other Asian exchanges. And you're right, it's very, very difficult. It's a huge infrastructure project. It could take a long time for it to really to scale to the heights of Coinbase. I think that what would be interesting is to see, will institutional investors and other companies build their own exchange? Because it's very risky for them to partake in any of these exchanges out there. Again, going back to the trust factor and how solvent are these companies, and last thing you want to do is try and trade millions of dollars, and next these guys go bankrupt in 2 days and you lost all that money. So what I'm looking at for, okay, will we see Coinbase serve institutional investors, or will institutional investors come up with their own exchanges themselves that they can maintain and take care of? So this would be the most interesting development. All we can do is wait and see.
Well, one of the key things that comes into a traditional stock market or a traditional finance market of any type is a market maker, right? So someone's got to be there to sort of meet the demand, and you don't have a guarantee of a market maker in a decentralized exchange. And so it makes it difficult to match up exactly, if I want to sell X amount of cryptocurrency, that someone is going to be there with what I want to exchange it for necessarily. And, there's a benefit to being a market maker, but in a decentralized exchange, that's a hard problem to solve.
Yeah. I guess we'll see. It's going to be a lot of development. I think in theory, as you said, it has big potential. But if someone does if someone does make it work, and I think it would pay off in a huge way. But I think we're like 2-3 years away from that happening.
Oh, absolutely. And when we're talking about institutional investors coming and making their own exchange, theoretically they would have the finances to be able to come in as a market maker and to fill that niche. However, with the instability in the market right now, you have this issue of, well, which tokens do you want to hold? Which ones do you make the market for? Like there's a lot of added risk in crypto just because it's so new, it's so unstable. So I think that a lot of the institutions are sort of happy to let the new players sort of take that risk and see where it's going, because it's going to be hard to unseat something like Coinbase at this point in time.
I agree. I think one thing that is interesting is that Coinbase do not want to do an IPO anytime soon. And my guess is that they want to get as many institutional investors in using their services before they even consider an IPO. So they're trying to pivot away from being, let's say, retail investor dependent to institutional investor dependent, and that would really significantly increase their valuation. So I think this is their big push at the moment. And if it's not working out, I think they will bring their IPO forward, possibly because institutional investors are coming up with their own solutions.
I've always sort of wondered, Neil, why we don't actually see individual coins just running their own exchanges. Around the height of the cryptocurrency boom, the big exchanges were charging millions to list you as a trading pair. So if you were going to run your own cryptocurrency and you wanted to get on Bittrex or Bitfinex or Coinbase or any of them, it would cost you upwards of $1, $2, sometimes even $8 million to get listed, and which I guess makes sense if you're doing a $40 million ICO. But the thing is, crypto exchanges are so relatively easy to build that it almost didn't make sense unless you were really going for the mass market to go and get listed on these big ones right away. And so this is why we see so many small exchanges coming up, but it almost is a bit of a head scratcher why we even needed the small exchanges, because some companies doing their ICO would just build their own exchange. So yeah, give us.
I think you're onto something there, and I never actually asked myself that, because when you're actually doing an ICO, you're effectively, in a way, an exchange. You are taking on Ether or Bitcoin, whatever, and you're going to be given back your own token in this process. So you've already kind of created this marketing funnel of people going towards you. The idea of using exchanges afterwards is almost like, lighting the load. Hey, it's now your problem. People can exchange on the open free market. But if you've already gone through the effort of attracting people to your website and doing a transaction like this, then I just say, why not continue? But just only in maybe in a fiat sense. Like if you're selling, Nathan token, maybe it's only US dollar and Nathan token, or maybe it's only one crypto and Nathan token, like maybe just Bitcoin and Nathan token. And I think that would be actually quite easy, going back to your point. And it could actually help a lot of people, because some of the anxiety after an ICO is, okay, which exchange is going to take on these tokens? Because at the moment, I cannot liquidate these tokens I'm after getting from Nathan. And I think you're right. I think it makes perfect sense for any ICO to really have their own mini exchange, because I think it'd be in everyone's interest. So yeah, maybe we'll see that in the future.
I mean, the disadvantage, of course, is that whenever you're holding someone else's money, you become a regulated financial entity, right? So you need some sort of licensing. We're not in the Wild West days anymore. You know, nobody wants to be an unregulated financial instrument or entity or vehicle. So, you know, but I think most companies out there that are doing a protocol, doing an exchange, or doing anything crypto related are going to have to jump through a bunch of regulatory hoops anyway. So at very least, what we should be seeing going forward is people considering the option of being their own exchange, and more as we're seeing, there are still many utility tokens and protocol tokens out there, but I think we're going to see a big whittling down of which types of projects end up using a protocol token that needs an exchange in the first place. You're going to see a lot more STOs, a lot of security tokens going out there, and those need specialized exchanges to begin with. And so really it's going to be only the payment tokens and the utility tokens that are going to fall in this category. And if you're using sort of a hybrid payment / utility token, people are probably going to start thinking, well, how do I ensure a stability in the price? Because that's going to become increasingly what people are going to want in these utility tokens is some sort of price stability. That could very well mean doing what Tether did, you know, doing an underpinning or a backing of a token with some dedicated market maker in fiat or something like that.
Well, I'm hearing that 2019 is supposed to be the year of the stablecoin, and we should see an explosion in stablecoins. And I guess you know, I'm looking forward to it because everyone's going to have to come up with different business models. And yeah, we'll see what comes of it. It's going to be very, very interesting.
Well, until next time, I guess keep your blood off the floor and try not to catch the falling knife, but just watch for that dip and careful out there. It's a bit of a bear.
I'll do my best, but I'm still tempted to jump in.
The time will come. The time will come, Neil. Just don't mortgage your house.
Thank you.